I'm going to teach you right now 3 basic fundamental rules for investing regarding trend. These are kind of the ground zero of investing and trading. You've got to figure this out before you do anything else. And even though a 5th grader can understand these concepts, I know that I myself, a 27-year veteran, have been guilty of breaking these rules with dire consequences, and I know that many other seasoned investors have done the same and probably were caught, so to speak, in 2022. So let me just show you, let me teach these to you, and these come from this old book of mine, David Landry on Swing Trading, written in 2021. Look at those old computers. Were computers that clunky in 2021? Thought they were a little bit more streamlined than that. But this book, incidentally, is a little bit dated. There are some sections that are a little bit, like I said, dated or not applicable, but there's some good sections too. And if you want to check it out, I'll put a link in the description below. Now, I want to just guide you to page 127. I'm going to read a paragraph, and then I'm going to get out the technical charts and show you via the charts what he's talking about. Let's take a look. Okay, I just snipped this from page 127, Dave Landry on Swing Trading. I'm just going to read you the part that I underlined. So Dave says, I focus mostly on the long side when the market is trading above its 50-day and 200-day simple moving averages, and focus mostly on the short side when the market is trading below its 50-day and 200-day moving averages. I also watch for a transition. That is, if a market is trading above both the 50 and 200 and then drops below the 50, I question whether or not a new downtrend is beginning or if it's simply a pullback. So let's simplify. If the market is trending above both its 50-day and 200-day simple moving averages, then that's when we look for opportunities to go long, to buy stock and hold to the upside. Conversely, if the market is trending beneath both its 50-day and 200-day simple moving averages, then that's our opportunity. Then that's when we should either be looking for opportunities to swing trade to the short side or to sit out, to paper trade, take a little break from trading entirely, and sit on our hands until the market action improves. And then the third thing, which is a little bit more complicated, if the market is trending upward above the 50 and 200-day and then undercuts the 50-day, then we need to start thinking about, is a new downtrend beginning, or is it simply a pullback? And that's when we get a little bit into the art of technical analysis. But that's kind of a caution flag, if you will. Now, I know myself, I've been trading for 27 years. For many years, I tried to play the long side regardless of what the general market was doing. And when, even if my entry points were really precise, even if I was controlling my risk very carefully, even if a stock's fundamentals, earnings, sales, profit margins were really good, I would still get caught up and do poorly. And that's because I was bucking the trend of the overall market. So these rules, while simple, are essential. When the market's in an uptrend, we work the market to the long side. When the market's in a downtrend, we work it to the short side, or we sit out. And when it is transitioning, then we pause, wait, and then when we figure out what it's doing, we move accordingly. Let me show you the S&P 500, and we'll look at the charts, and we can visualize some of this stuff. Okay, so let's take a look now at the S&P 500 and apply what we've learned. The S&P 500 are the 500 biggest companies in the U.S. stock market. The tradable ETF for the S&P 500 is the SPY. Before we do this, 3 things. 1, not investment advice. This is just for education. 2, if you wouldn't mind liking the video, that'll get it out to more subscribers. And 3, I have a Patreon where I show my portfolio and focus list every weekend and do blog posts and such. 7-day free trial on that. Link in the description. So looking at the S&P 500 right now, we can see that for the last month and a half or so, we meaning the S&P 500, has firmly been above its 50-day and its 200-day simple moving averages. So that means this is when, if we find stocks at good buy points, this is the time when we should be going long. Conversely, I know I just said conversely, but let me just continue with that point. A lot of times once the market gets above its 50-day and 200-day, we get a nice tradable rally of 3 or 4 or even 6 months. And then inevitably, this was the nice trading rally we had in the spring and early summer of 2023. Inevitably, the market undercuts its 50-day like it did here in mid-August of 2023. When it undercuts the 50-day, then that's a caution. That's when we need to be careful, and we need to look at the body of stocks and try to determine if a new downtrend is starting. And that's beyond the scope of this video, but certainly a very cautious thing and prudent thing to do if you're a beginner is just not to open any new swing trades until the market starts trending solidly again to the upside. Now that's not what Mark Minervini does. He wants to get into those leaders when they begin to lead. But if you're a beginner or even an intermediate, I think trading long stocks only when the market's above the 50 and 200 days is a really good rule. And when it undercuts the 200-day like right here, this is when you really need to be cautious, when you need to not open up any long positions and think about going short. Now, of course there are times when you're going to get whipsawed when the market undercuts an average and then, blasts off in the other direction. And that's just the cost of doing business. Let's look at 2 more examples. We had a really nice rally in the market from 2020 all the way up until 2022. Beginning in July 2020, the market stayed above its 200-day simple moving average, and for the most part stayed above its 50-day. And this is when we should have been playing positions to the long side. And when it undercuts the 50-day, then that's when you pause, look at what the stocks at large are doing, and figure out, okay, is this just a normal pullback, or is this the beginning of a bear market? And that's, like I said, beyond the scope of this video, and that is it's part of the art of technical analysis. Now I'm going to modify Tom Landry's a famous Dallas Cowboys football coach. I'm going to modify Dave Landry's rule about shorting a little bit. Ideally, you want the index to be beneath the 50-day, which is this line, and the 200-day. We're looking at 2022 here. But when the market keeps pulling up to the 200-day and rolling over, that's a good time to short as well. So I would say as long as the market is beneath the 200-day, you have the potential for some good short positions, and particularly when it's beneath the 50-day and the 200-day. Then there are times when the market is whipsawing sideways and it keeps, pulling back and forth between the averages. We saw that at the end of 2022 and the first few months of 2023 as the market transitioned, if we zoom out from a bear market to a bull market. And in these a whipsaw market is terrible for swing traders, and that's when you want to just be on the sidelines. So those are the three kind of fundamental trend following rules given to us from Dave Landry. And if you want to check out his book, I would say 70% of it is still quite good. 30% of it, he talks about some computer programs and things that he was using back in 2021, which are no longer, which are anachronistic now or dated, I suppose. But you definitely would learn a few tricks. And there's a link to his book in the description below. I'm not affiliated with him at all, so I'm not just pushing his book. I do think it's a good book. And then, lastly, I am partnered with Seeking Alpha, which is an incredible database of fundamental analysis articles, news, transcripts, financial information. I encourage you to check it out. There's a free version and a premium version. If you subscribe to the premium version, I will get a little commission. There's a link to that in the description as well. I think that's all I need to say or want to say today. Let me know if you have any comments or questions, and I encourage you to check out some of my other technical analysis videos. I'll link one of them to the end of the video. Take care, everyone.